Hello everybody and welcome to PAY360 in London. My name is Tyler Pay. I'm a journalist here at the FinTech Times. We are on day 2 of the conference and I'm very happy to now be joined by Todd Clyde of Token. Todd, how are you?
Doing very well, Tyler. Nice to meet you.
Nice to meet you too. What do you make of the conference so far?
It is really improved and it's a seriously good conference. You know, the attendees here, the industry representation, prospects, customers, so no, it's been a very valuable 2 days for sure.
Fantastic. Well, before we dive into our conversation, why don't you give our audience just a little bit of insight into who you are, what Token is, and what your position within the company is?
Sure. I'm Todd Clyde. I'm the CEO of Token. So despite our name Token, we have nothing to do with cryptocurrencies. I'll explain what Token does in a minute. But no, I'm an American, as you can tell by my accent. I relocated 6 years ago to London, really for this opportunity in open banking. You know, I really felt that open banking was going to be the biggest disruption to hit the financial services industry in a very long time, and I wanted to be part of that. So my background is 35 years in enterprise software. I've been doing 25 years in startups, brought a lot of groundbreaking technologies to market, and I just really saw that open banking, and more specifically account-to-account payments, was going to be something I wanted to be part of. And then as far as Token, so what does Token do? We're not crypto. What we do is we're an open banking payments platform. And we're basically trying to drive the shift from the use of traditional payment methods like cards and wallets to the use of bank transfers, or what are called account-to-account payments. Now, how we enable that is we built a new lower cost account-to-account payment network. So that means we've connected to every bank and built a payments network out of that. Second thing we've done is we built a platform that provides payments infrastructure for existing payments providers. So we're the simplest way for a gateway or an acquirer to plug in and activate account-to-account payments. So think of us, we're plumbing. We're successful when we're invisible. So we're under the water lines, we're plumbing, and we are beneath some of the most successful open banking payment initiatives in the UK and Europe. So we're live in 16 countries. We're doing about 17% of all the volume of all the transactions in the UK. We're growing our volumes 800% year over year so far, year to date in Europe. And we're behind some of the very big names such as HSBC, BNP, MasterCard, PaySafe, Nuve, and a number of other ones I can't mention at this point in time. So yeah, so we're the enabler to large payment players.
Wow, that's really fantastic, and we're so happy to have you here with us today having this conversation. So you obviously talked a lot about open banking. That's really your bread and butter, if you will. If we look at open banking and the wider payments market, how is open banking causing such disruption, and what can we expect from the evolution of open banking within the next 5 years?
Good. So you're right, everybody talks about what a disruption this is going to be, but they don't explain why. And once you explain why, it becomes obvious. So think about, we have a really good world of payments right now that works really well. The majority of the payments are based on networks that have been built by the card companies that reach everyone and delivered universal acceptance, but they're complex, they're proprietary, they're closed, they're expensive. What we're doing is we're changing the network infrastructure used to process payments from closed, proprietary, complex, expensive to open, simple, lower cost. The major catalyst is modern technology, APIs, instant settlement systems. So we're basically using instant payment rails and APIs to access those rails to upgrade the network infrastructure that we're going to use for payments for the next 50 years. So, you know, the old network has been in place for 50 years, and the new network is, think of it like the telecommunications. So every phone in the world used to be hardwired. Then wireless came, which made a dramatically lower cost and made telecoms even become more pervasive. That's exactly what's happening. We're going from an old closed proprietary network infrastructure to a new open, simpler, less expensive, leveraging modern technologies of API and instant payment rails. So that's why this is such a huge disruption. So what's the outlook for this? the outlook for account-to-account payments is they're no longer going to be a niche alternative payment method. They're going to become a mainstream form of payment. They're projected to become 30% of all e-commerce, really powered by open banking payments at the core of that. And yeah, so I say I'm not going to leave this job until we drop the name alternative from alternative payment method when we refer to an account-to-account payment. So yeah, it will become mainstream. It will eliminate the debit card. It will become 30% of all commerce.
That's really, really interesting. And I love the example you gave in terms of the telecommunications and the advancements and evolution of the telephone. I thought that was really, really interesting. In terms of account-to-account payments, obviously you really want to push it into mainstream. Why do you see account-to-account payments as being a threat to alternative payment methods, and cards more specifically?
Well, everybody understands why it's a threat to cards, because as I said, the cards created a great world of payments, but it was expensive. It was built by intermediaries. And it's really evident that now the threat to cards is we could reach anyone with a bank account, so we could exceed the reach of cards. Conversion rates are better than cards, and now we could do so at a dramatically lower cost. So that's a self-evident one, and the primary beneficiaries of that are merchants. What people don't realize is that this is really a threat to alternative payment methods. And the reason is alternative payment methods are horrible for gateways and acquirers. They're horrible for their distribution partners, meaning it erodes the card-based revenues. You know, again, the card systems were designed to share the money with everyone. That's why they're so embedded. Alternative payment methods cut most people out of it. And so gateways and acquirers make significantly less when you choose an alternative payment method rather than a card. So the reason open banking payments is a threat to alternative payment methods is we make it the economics better for the payment service provider. So by launching their own white label account-to-account payment capability, they can make more revenues than they make on other alternative payment methods and higher margins than they make on a card payment. So it's clear the world's transitioning away from cards long-term. We lessen the pain of moving to that, and we have a better revenue profile for the distribution partners, gateways and acquirers, than alternative payment methods provide. So that's why I think, yeah, we're a threat to the APMs because we have better economics for their distribution partners.
Well, thank you, Todd. I thought that would be a really interesting area to watch, and especially from tokens perspective, as well as that sort of begins to phase out cards and alternative payment methods as you described. In terms of open banking trends, especially things like variable recurring payments, which obviously are becoming more widespread within the industry, what can you tell us about how that is evolving and any use cases that you've noticed?
Yeah, so let's talk about the current state of the market. So open banking payments are live. You know, there's 7-8 million transactions a month just to the CMA9 banks in the UK, growing 7 to 10% month over month. There's 7.5 million users of open banking payments in the UK right now. And the use cases that are getting really good traction are topping up a wallet. So we have this whole new financial services layer that's been powered by fintechs. They need access to funds to load those. So loading a challenger bank, loading FX wallets, loading payments wallets, loading crypto wallets. So that's a big use case, just loading those. Paying off debt, so paying off credit cards. That's a really big use case here in the UK. 1 out of 3 credit cards in the UK can be paid off using an open banking payment transfer at this point in time. And we're also live with general e-commerce. But all those that I mentioned, what they have in common right now is it's user initiated, user authenticated. So think of a user present. It's what we call a single immediate payment. So it's going well, it's growing well, but that's limited to about 10 to 20% of the types of payments you and I make. What's going to really open up this market to about 70 to 80% of the types of payments we make is these recurring payments. So variable recurring payment is a new mandate in the UK that's going to allow bank payments to take over subscription payments, installment payments, merchant-initiated payments. So what I mean by that is I'm going to be able to step out of an Uber, and the Uber's application is going to be able to charge my bank account with me not taking any action. So that's kind of what this variable recurring payments will enable. And the last thing is also for traditional e-commerce, it's going to allow me to pre-authorize a merchant so that I really can do a one-click checkout. So a very frictionless e-commerce checkout using a bank transfer. So it's going to drive dramatic improvements in user experience. It's going to drive dramatic increase in the target addressable market by moving from single to recurring payments. In Europe, they're probably going to be about 2 years behind, but they're also launching something called dynamic recurring payments, which will allow the same expansion of target market and same improvement of user experience as well.
You talk a lot about you mentioned the mandate, especially by the CMA for variable recurring payments in the UK at least. What can you tell us about the rise of different regulations both in the UK and in the European Economic Region, and how that will affect the overall landscape?
Yeah, so the UK with the original CMA order really got ahead of the entire world, which is why it's happened first here in the UK. The UK was the first to go beyond what was required by PSD2 and has mandated recurring payments in the form of me-to-me payments. We call them sweeps. They're leaving it up to the market to go further into non-me-to-me, non-sweeping variable recurring payments. So that's a very exciting trend here in the UK. But I think what we're all sitting on our hands here in the UK is to see what comes out from the Joint Regulatory Oversight Committee, affectionately known as JROC. They're going to determine the future of the open banking entity, which is really going to figure out the future of user experience, the future of fraud protection, the future of consumer protection, and the future of this premium functionality. So the regulatory issue in the UK really is what JROC's going to do and what the future of the OBIE is. In Europe, there's two big initiatives. So one, the European Payments Council has mandated adoption of SEPA Instant. That should be ratified by all the member states this year and should be mandated next year. And then that means all the banks have to support an instant payment rail. That's going to be a huge, huge catalyst for this market. And the second is what's called the SEPA Payment Account Access Scheme, where they are designing and mandating these premium APIs for recurring payments. And they're doing so in a way that's going to share more of the benefit with banks, which I think is going to make a more healthy ecosystem when you have the banks supplying because it's rewarding for them, in addition to merchants and the payments industry consuming on that side. But yeah, SEPA Instant, SEPA Payment Account Access Scheme in Europe, JROC and OBIE here in UK are really the major legislative items on the horizon.
I think part of the focus of the regulators, is to make sure that they're able to deliver the best outcome for anybody who chooses to interact with this technology, be that a merchant, bank, payment service provider. How can that demographic be leveraging open banking to their benefit? What benefits will they see from using the technology within their business?
Let's take each one of those. So the benefits to consumers is it's just really intuitive and more secure. So and much less friction. So sure, if you store a credit card, if you have a card on file, it's a good user experience. But if you've ever got your card out in one hand, your phone out in the other hand, trying to transpose the digits, that's really a problem. An open banking payment, you don't type in anything. You authenticate exactly the way you log into mobile banking, which most people do every single day now. And I know, and we're working on consumer education to know that it's much more secure. I'm not sharing card numbers, I'm not sharing account details. My bank is authenticating me, no data is leaving the bank. So less friction, more secure, very intuitive. That's for consumers. Merchants, the no-brainers, because the cost savings are so dramatic. So we're seeing a 2 to 20 times lower cost per merchant per transaction. So lower cost, immediate settlement. Now for the PSPs, open banking payments could be a real threat or a real opportunity for them. So the real threat is if they do nothing, their merchants are going to demand these lower cost payments and they're going to go around them. And at best, they're going to lose volume, worse, they're going to churn customers. So PSPs have to do something. They can choose to aggregate these just like any other local payment method. So, you've all seen that checkout where you've got Ideal and Trustly and Go Cardless and you've got 40 different payment choices. That's a bad way because, as I said earlier, they make almost no money when you click on those buttons. The better way is for them to launch their own private label pay by bank capability. You could call it pay by bank, you could brand it your company, but you get to clean up the checkout page and you make significantly greater revenue on your own white labeled offering than aggregating 250 other local payment methods. So that's kind of what's in it for each one of those players. Now, what's in it for banks? This has not been a good thing for banks when they're just supplying all this. So they've had to get really on the demand side. They've had to launch their own propositions that leverage open banking. Many of our customers, we help banks do that. So BNP, HSBC have all launched open payment propositions powered by Token. And this future regulation is actually going to bring some revenue sharing for the banks as well. So I think the future also has more in store for the banks as well and allow them to recoup some more of their investment that they made in opening up APIs to the outside world.
You've painted a really fascinating picture of what the current landscape of open banking looks like here in the UK and across the wider European region. I'm just wondering, in terms of Token's attendance today at PAY360, what trends will you be keeping an eye on while you're walking around the conference today? And what do you hope to get out of your attendance at Token?
Well, we certainly meet a lot of prospects here. We certainly meet a lot of customers here. But as far as trends that we're hearing, a lot of focus on variable recurring payments because we're in the UK and because that's so close. So there was an entire stage dedicated to it. It's a very important topic. And there's a lot of unanswered questions about that because it has not been mandated. So the banks and the third parties like Token have to figure it out. So answers of liability, commercial sharing, legal agreements. So it's really not a technology challenge like the first phase was. It's really now a liability and commercial challenge. So that's really the trend we're paying attention to, is closing the gap and answering those questions. Also, I'm never one who really likes moving the goalposts and redefining the problem and changing your focus. I want everybody to remain focused on API reliability, a reduction in rejections by banks rather than an increase of rejection by banks, that we continue to improve the user experience with the existing APIs. So yeah, I always try to be a voice of shows like this. You often chase the future hot topic. And while I know we need to fill a lot of gaps, and I know why those provide a lot of promise, I like to make sure we're not taking our eye off the ball about finishing the job well, that we started on single immediate payments as well, and getting consumers educated, getting them using it, and yeah, addressing the issues that I mentioned.
That's fantastic. Well, Todd, Clyde of Token, thank you so much for coming to speak to us today.
Thank you, Tyler. Appreciate your time.